All right, guys, Paul Singh, Market Speculator, with day 8 of the 30 days the part-time and swing trading mastery challenge. Last 4 challenges were all about managing risk. We're moving on from that now and hitting one of the indicators I used. And we've already talked about moving averages, which we can consider indicators. The only other real indicator I use is stochastics. And that might be a surprise to some of you. I know a lot of you like to use a lot of different indicators. I've been trading for over 20 years now. I've tested everything. And what I've found is the more indicators you have, the more, I wouldn't say worse you're going to trade, but it leads to poor decision making. And you don't need all of these indicators. You really need to understand price action, volume patterns, chart patterns. The indicators can be used as a tool or a guide. And most of them are recording momentum or rate of change. So you only need 1 or 2. And the one that I use is stochastics. And we're going to go over that today. Now, we're going to go over the fundamentals of using it. And then later on, we're going to get into actual setups and using the stochastics with our setups. But that's not for today. Today, we really have to understand how and why we use them. You've read the article by now. We're going to go through some charts. I'm going to pull up my screen here, and we're going to use some examples using the indexes, using Netflix and a few other stocks to go over what we talked about in the article. So you know, stochastics we're using as an overbought and oversold measure. Now, there's a couple of ways we're going to use this. We talk about the overbought and sold levels in oversold levels in the article. We also use it to help us with our market analysis. Now, in one of our early challenges, we talked about market analysis. We talked about overbought and oversold conditions, and that's going to lead us into how we're trading in the sense that when you're in a market trend, the beginning or middle of that trend, you want to be really aggressive. And as the trend becomes overbought or oversold, you want to get less aggressive because that's where there's potential for a reversal. Now, we're not saying there is going to be a reversal and you don't have to get out completely, but this stochastic analysis will help you with that when you do your market analysis. And it will also help you with specific stocks. Is this stock overbought? Is this stock oversold? So let's take a look at Netflix right now and apply what we learned in the lesson. Now, we talked about setting the indicator at 533. Now, I'm using the full stochastics. There are fast and slow stochastics. The full stochastics have both of those. So that's why we see 2 different lines. The specifics of how this is calculated doesn't really matter. Knowing the math behind it is not going to make you a better trader. Just know you need it at 533, and you're using the full stochastics. Now, remember, the key levels we're watching for. The lines here are 70, actually on TC2000, they put the line at 80, but generally 70 is where we start thinking of a stock as potentially overbought, meaning the rate of change is increasing to a point where it's going to be really hard for that stock to sustain itself. So now again, that doesn't mean we just jump out of the stock, but that gives us cause to pause. And whether we're in the stock, we might want to think about getting out or maybe taking a little off. It'll help us set our targets. We talked about setting targets before. And if we're looking to get in, generally it's not advisable to get into a stock when it is overbought. So we're going to start that at 70, which is right about here on the stochastic measure. 85 is where we start saying it's extreme. At that point, we probably actually expect a reversal pretty soon, or at least some major consolidation. It is very hard for a stock or a market to continue at that same pace at those levels, 85, 90, 95. Those are really extreme levels. Actually, for some of our reversal setups where we'd actually short some of these long trends, we do that when the stock is at 90. But there are other factors we have to talk about. So don't think about doing that right now just because you see a stock at 90. We never go just by the stochastic, but keep that in mind. When we get to 85, 90, 95, we're looking at extreme levels. And that's overbought. Now, oversold when the stock is really beaten down. 30 is where we start thinking a stock is oversold. 15 is where we say that stock is extremely oversold and we could expect maybe a snapback bounce. So This is the way we're thinking of stochastics. So let's just look at some of these charts. Let's actually start with the market itself. Let's look at SPY over the last year of trading. And let's just see how we've reacted to certain stochastic levels. Now, we are at extreme levels right now. Now, that does not mean the market is going to pull back. But this is a point where we can say to ourselves, we have to be careful now. Now, we have other indicators. We talked about our full market analysis. We really like the market right now. Maybe we just expect a consolidation rather than a snapback. But definitely the market is a little overheated now. Now let's look at May, when stochastics got to about 90, actually a high here of 93 to 96. You can see we made a little high here at 273, and then we actually pulled back down to 268. Wasn't huge, wasn't extreme. We're not saying the market is going to crash, but this probably is not the spot where you want to be entering very aggressively. Maybe take a shot or two, but you don't want to be betting the farm when we're at these levels. Now that when it pulled back here, worked off some of that overbought condition, then you can start to add positions. That's what we've done here. Now look at what happened here when stochastics were at 20. That became a buy opportunity. We got a little overextended to the downside here, and then we made the big run. Right here, we hit an extreme stochastic level on Netflix, and what did Netflix do? Pulled right back down. We hit an extreme overbought condition right here. The low of that condition was on the 5th, and then a few days later on the 9th is when we reversed. Now remember, this isn't a signal that you jump in at this point, but this is cluing us in that the market is oversold, and we might want to think about adding longs. We actually started adding when this hammer came in. So you're factoring it in with other things that you use for your trading setups, which again, we're going to talk about later. But just know now this is an oversold condition, and the market is ripe for a reversal, and that's exactly what it did a few days later. And we made a really nice run here. There was another oversold condition right here. We made a huge run here. There was an overbought condition here on the 23rd. Now the market ran for a few more days and then reversed. So this is very common. Start paying attention to overbought and oversold conditions. On this SPY, let's look at Netflix. You're going to see some of the same stuff. Also notice that Netflix tended to pull back around the same time SPY did. So remember that market analysis we talked about, and you're going to see this in the charts. These pullbacks happened when the market was pulling back. So we can see here, again, same spots. This was on the 29th, where stochastics made a extreme level at 95, 96. Netflix pulled back. Netflix pulled back here, and this was a few days after. Again, it made a stochastic high. And just about all of these stochastics highs led to a pullback or at least a consolidation in the stock. And same goes for the oversold levels right here. Perfect buying opportunity. Perfect buying opportunity. Perfect buying opportunity. So this is a really good guide. We can go through all of these stocks. You're going to see the same things. Look at where I made this top right here. Look where stochastics were. Look at where stochastics were here at these bottoms. Look at where the stochastic levels were. So when you're buying at overbought conditions, pay attention to those stochastics. Keep one other thing in mind. In very strong markets, the stochastics can stay high for a long period of time. So for example, now the market did reverse here when we were at 95, but it was in this high range for about a month. And during that period, Google ran from, we can see here, from about 1,085 all the way to 1,195. So over 100 points here during this period, while stochastics stayed at these levels. So this is a good example of just because it's extreme doesn't mean it's going to reverse. So you have to understand the market we're in. You have to know that if it's a really momentum market, if the stock has a lot of good news, it could still run. But this will help you as a guide, and it will help you with your reversal plays as well. And it also lets you know if a stock is really strong, if it continues to stay at these levels instead of just reversing right away. So these are the things you're going to pay attention to. Now I've listed some stocks in the daily exercise for today. I want you to do what we did right here. I want you to go back about 2 years on these stocks that I listed. And you can pull up a bunch of other stocks too. You know, what I've done here, I have the Qs, NASDAQ basic 100 here, sorted by the top performers over the last 30 days. Go through some of these and just see how this price action reacted after you hit certain stochastic levels.